Today, we will be looking at Malaysia's one and only closed-ended fund. We do own some stocks mentioned in this video, but we are not shareholders of icapital. And of course, none of what we say should be taken as financial advice. Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it. Okay, Jonathan, so for those of you who are unaware, icapital is probably one of the longest running fund out there in Malaysia. It has seen its time of success and probably even to some extent their times of struggles. But certainly the fund manager that is behind this is someone we've interviewed before, which is Mr. Tan Teng Boo. You can check out the podcast somewhere here.
Links,
Yes, correct. So it's a very good podcast because you get to learn a lot about how he looks at things, which I found really, really fascinating. He's a very honest guy. And, you know, it's rare today to have, you know, honest people, whether you agree with him or not. So, but today we are looking at some of the stocks that he has filled up his portfolio with and also the performance over the years. So let's start off, Jonathan. What can you share with us with the performance?
So their annual report is actually very straightforward. It's pretty clear cut.
Right.
If you want to look at what stocks they are holding, also what is the fund's performance, it's actually very clearly break down for you there. You can actually just go to their website, icapital, and then you just type in annual report, then boom, you see there's a bunch of annual report. And yeah, they have been pretty transparent with their information. So you can look at this overall data over here. This is their funds NAV's performance from 2005 to 2022. NAV is basically your net asset value, and it has actually grew about 249%. Now, Warren Buffett's very important rule is number one, don't lose money.
Correct.
And so they have been
they have not lost money.
Yeah, they have not lost money. So that is actually a very good sign.
Yes.
And if you look at their funds market price over time, it has actually achieved also double the 2 times. So it's around 134%.
Now it's important to know, you might be looking at this and think, well, doesn't that signal that it is undervalued? Now, this is actually a pretty big discussion about the lower NAV to the price that, you know, icapital themselves can actually address this. So go Google some of their responses to this. We are not going to be dealing with this, all right, guys? But yeah, let's continue.
Yes, correct. And if you look at the comparison between their funds NAV versus the MSCI and Malaysia, it has been outperforming by massively. Yeah, and you can see that this is their annualized return. So far it looks pretty decent to me. Yes,
you can see that the biggest outperformance, not necessarily the biggest outperformance, but a big chunk of their performance also came in the early years. So you're looking at 2006, 2007, and actually these 2 years were big amounts. But so was the case with MSCI. But you can see that over the years, they have always outperformed the MSCI Malaysia. However, I would probably wager to say that it's not outperforming as fast as it used to be. But who knows, right? Going forward.
All right. So this is the iCap stock portfolio.
Yes.
Before we go into the details of what stock are they holding, but let's just have a look at what is their cost. So in the early days, they have been quite heavily invested, but then after that, they kind of like slow down a little bit, and they have been quite a conservative investor. You can see like the amount of cash has been like increasing by a lot. Yeah,
it roughly at some point, right, they do actually have a lot more cash than they have stocks.
I believe the numbers is around 70+%.
Right, until recently only. Right, you can see
recently, then you can see compared between the cash and then this one. And so far, if you look at their market value against their cost, right, there's only 2 years that they make like an unrealized loss, which is around 2019 to 2020, and that's during the COVID-19.
Yes.
Yeah. So but so far the rest of the years they have been quite positive.
Yes.
Yeah. Okay, so this is just a quick small little chart for you to summarize how is their performance on their fund. You can look at, you see, like just now I mentioned, actually it's in 2020 and 2021 that they are making loss over here, these two. But 2021 is only very slightly only, so it's about 2%. This is excluding their cash. Yeah,
Okay.
this one is including their cash, right?
I see.
So if you tell me, I mean, this is a very good well-run fund.
Yes. Over time, yes.
Yes,
for
over
sure.
time it's a pretty well-run fund. So kudos to ICAP. And okay, so apologies, I cannot make this table very clear because there's just
A lot of data,
too many data and too many stocks that they held over the years. But the left-hand side over here is basically telling you what stocks they own during that particular year. And then this right-hand side table tells you the unrealized profit year on year. For example, like 2007, they compare between 2007 versus the cost during that year versus the market value during that year. Yeah, just put it as simple. And if you look at the yellow color highlighted one, basically those are the stocks that they made quite a decent profit. Some even like multi-baggers kind of profit.
Correct.
Yeah, so that is actually pretty good. And then the orange one is the one that they make quite a bit of unrealized loss. And then I believe they also sold it at a loss also.
Okay.
Yeah, and they exited it out of the loss. Yeah. And yeah, I won't go through every single details because...
But if any questions you have about the Excel sheet or the data, just ask in the comments.
Yes, correct. But yeah, you have to squint your eyes a little bit.
Yes.
Okay, so this is the position size. As you can see, they are not like your typical fund manager.
Yes.
Why I say that is because if you look at the position sizing, right, it's actually pretty
Concentrated.
big. Yeah. And it's concentrated at a pretty big one. So it's like more than 10%. If you compare to your standard conventional fund manager, they maybe put like maybe maximum 5% also. Because
5% is huge really. Like
yeah.
You typically 1%, 2% is like the average, right? 3% is above average really.
Exactly. And then there's even 1 year that they own like 30%.
Yeah.
So that tells you that you can still perform well in the market having a concentrated portfolio despite having and not a diversified portfolio. So this is basically the number of stocks that they held throughout the years. You can see that they have been pretty like concentrated, only 12 stocks. The highest number of stocks they actually held was recently. They held about 21 stocks, and the lowest one they actually held it was in 2016, which is 7 stocks only.
Yes, well, of course, that was probably also where their cash was the highest also, if I had to guess. Right?
Okay, so this is the current portfolio. Not a buy and sell recommendation. This is just for your reference only. You can see that the current biggest shareholdings is, I believe, one of the company that most retail investors are actually paying attention to right now, which is SAM Engineering, and it has gone up quite a lot. Yes. ICAP managed to capture this stock in 2019.
Yes, so this was and they probably experienced the COVID downturn as well. Right? They rode it through. But of course now they're reaping the rewards.
Yes, correct. And and then there's a lot of these other famous names maybe you guys have looked before. But I wouldn't really go through every single details, but this is their current portfolio.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
Okay, so basically just to summarize the entire stock portfolio, this is what I have found. So number one, the largest position that ever was held by them was a company called Wolfstead. It was a 30% position size in 2016. And also it is one of the top unrealized loss of 18 million in 2022. Yeah, this is unrealized. They haven't realized it yet. So you need to know what's that. And then what made them a huge fortune is there's a lot of stocks. So you can see there is Lion Diversified, and this company actually helped them generate a 3.6x return.
Yes.
And then you can go on, there's a huge list, but there's one company that caught my eye, which is Padini, because this company, they actually made 19.7x.
Yes, correct.
Yeah.
The only thing that's not so nice is that They only put in about 5.5 million.
Yeah. Actually, they put 6 million.
Right.
But then they sold.
They reduced it.
They reduced it then to 5 million. Then
okay.
they held it 5 million. Yeah. But still, it is a 19x.
Of course,
that is a very, very good record. Yeah, again, just to reiterate what I said just now, Padini is the only stock that made them 19x return, 19 bagger, and then also this stock is the one that is heavily giving them contributing unrealized gain to this date. In 2022, I believe they still make about 52 million from this stock, unrealized profit, followed by their current biggest shareholding, which is SAM. They currently make about 39 million unrealized gain. And then there's these two companies that actually
didn't do so well,
didn't do really that well, which is Parkson and Boosit. So you can see that Parkson actually, I believe they held through quite a long period of time. Same of Boosit also. So these two companies, they actually lost about 77 and 66% respectively. Yeah. Okay, so this is our final takeaway. Just a general overview, right? If you look at their history of stock picking. So in 2006 to 2015, they have very great picks. Yeah. You can see like your Pet Deck, Padini, Lion Diversify, FNN, and also PIE. So those are very good ones. 2016 to 2019, their stock picks hasn't really worked out.
I mean, when you compare it at least from 06 to 15. Right?
Yes, correct. Right. If you compare to during that year. But recently, which is in 2020 to 2022, their picks are getting improving again. So they managed to scoop up KGB and SAM and also Kobe Tech, but they sold it as a profit lah.
Yes.
Profit.
Correct.
So and also one thing you need to take note is that their biggest contributor to their portfolio right now is Padini.
Yes.
Yeah. So that's the 19 bagger company.
Correct.
So
correct. And I mean, when you have a big fund, a 19 bagger is enough for your whole career.
Yes, correct. Yeah. Again, I like what you mentioned. The only sad thing is that they didn't put in enough money.
But in hindsight, right?
Yes, correct.
So just to add one thing is that one of the key aspects about iCapital, and we actually discussed this in detail in the podcast, is that they have a lot of cash. Now, if you actually go back and do the math, we didn't quite put it up here, but on average, it's about 50 to 60%, like the cash since 05 to
on average
2022. Let's just call it 50%. And the returns, right, with an average cash balance of 50% is 7.81%, right, according to the NAV on the annual report. Now, 7.81% is not exactly on the surface the eye-catching kind of return, right? You got your Warren Buffetts with 19%. You got, all these long-term funds around the world that can do really well. Some other funds in Malaysia, these, growth funds and small cap funds, they've also done what we call high teens returns or teen returns, right? And you might think, well, what's so impressive about 7.81%? Now, the way I think about it is, imagine if they invested all their cash, right? So what does it go up to be? If you guys know the math, basically, if they invested all their money, they would essentially be doubling these returns right now. So long story short, they would actually have a return closer to 15 to 16%. That's how I think about it. So what does this tell you as an investor? What does it tell me as an investor? One, of course, we and ICAP, like individuals and ICAP, different, right? They have to handle things like redemptions. So maybe if people are not happy with their fund, they want to take money out, they need to have some money to be able to pay out. And, their capital is relatively fixed, right? So they have to be a lot more careful with the money that they have. And of course, the more extended reasons why Mr. Tan has decided to have a much higher cash balance can be explained in the podcast. But it does tell you, right, that if you have the right stocks and if you actually bet a lot heavier, the returns you get would be a lot better than the index. And in fact, 15 to 16% is not just better than the Malaysian index, but also better than the S&P 500 or even the Nasdaq, right? Yep. So that's one thing we have to take note of with the fund. Right, I know some people are not too enamored by the fact that he has a lot of cash in the portfolio. Again, go watch the video, the podcast to see his explanation.
Yep. Okay, and before you guys go, this is our FIRL Pro's stock performance so far. Still not at Mr. Tan's level yet.
Yes, correct.
Hopefully we can achieve to his rate of return or the 19x figure. Wow.
Yes.
Yeah, that's a huge motivation right
for
there.
Our 19x.
Yes. Or even better. Yeah. But anyways, basically what FIRL Pro is giving you stocks that we have high conviction on, and we actually write our analysis and report on them. And minimum for 1 month, we're gonna give you 2 reports.
Yep.
And also we're gonna
easy to read.
Yes, it's an easy to read report. It's just a cup of coffee only. And we're also giving you a big picture report, which basically tells you where is the economy going. And this actually helps you better be prepared if there's any downturn going to happen. And yeah, if you are still not convinced yet, you can actually check out our free sample. The links to this free sample, which you can actually have a sneak peek on our FIRL Pro stock portfolio, and also the big picture report, as well as the SIB program. The links are actually in the description and comments down below. And MJ.
Yeah, guys, thanks for staying all the way. By the way, I realized that a lot of you guys like this sort of, us reviewing funds and all that. So why not you let us know in the comments if there's a specific fund you want us to look at. We will definitely pay a lot of attention to that and perhaps even do a video on it. Now, with that, guys, thank you for staying all the way until the end, and I hope to see you in the next video.